Hello, friends. If you are 65 or older and filed a federal, what I am about to show you takes 60 seconds to check. And for a lot of people watching right now, that 60 seconds is going to matter. Before we go any further, I need you to think carefully about three specific. Situation 1. You filed your 2025 federal tax return in maybe even January. Tax software walked you through the whole thing, but a brand new IRS form called Schedule 1-A never appeared. That return is now on file with the IRS showing a taxable income $6,000. The IRS is not going to send you a letter about it. Situation 2. You heard about the $6,000 break for seniors from a neighbor, from a headline, from someone who sent you a link. You waited for something to arrive. A letter, a deposit, a notification. Nothing came. Because here is the thing, this is not a check. It is not a payment. It is your taxes may have been calculated on income you were entitled to shield. Situation 3. You have a traditional IRA you have not touched. Every dollar you pull out gets taxed. And that has always felt like the wrong. But there is a 4-year window open right now where the math has shifted in your favor. And most people with an untouched IRA will not discover this until 2020, when the window has already closed. If any one of those 3 situations, today we go through exactly what this deduction is, who qualifies, and what to do right now, depending on which situation you are in. This video is for Americans 65 and older who want to understand the new IRS, specifically for anyone who filed a 2025 return and wants to confirm it was done correctly. Everything I share comes from publicly available official information from the Internal Revenue Service, the Social Security Administration, and the Tax Foundation, and I will name the source each time I give you a number. This is educational content only, not personalized tax. And nothing here is a promise that you will receive any specific dollar amount. Before any major decision, talk to a licensed tax professional. Now let us get into it. When this law passed in July 2020, $6,000 tax break for seniors, confirmed by the IRS, that framing made people expect something to arrive. When nothing arrived, most assumed either the headlines were wrong or they did not qualify. For many, neither is true. They qualified, and it still can be. If this is your first time here, subscribe. The specific form names and steps that determine whether a law actually changes anything. Which of those 3 situations sounds most like yours right now? Drop the number 1, 2, or 3 that tells me which piece to focus on in future videos and helps everyone watch. Now, the core clarification: a tax deduction reduces the amount of your income that it is not a check. It is not added to your Social Security benefit. It lowers your taxable income, the number the IRS uses to calculate what you owe. A tax credit reduces what you owe dollar for dollar. A deduction reduces the income that gets taxed in the first place. Some people watching this expected a $6,000 refund check. And knowing that difference is exactly what separates people who claimed this correctly. The One Big Beautiful Bill signed into law on July 4th. It created a new deduction of up to $6,000 per person for Americans, $12,000 for a married couple where both spouses qualify. This deduction is active for tax years 2025 through 2028. After 2028, it expires. Per the Internal Revenue Service, to qualify, you must be 65 or older by December 31st of the tax year, have a valid Social Security number, and the deduction is available whether you write down the income limits. Modified adjusted gross income under $150,000 for a married couple filing jointly. Above those numbers, the deduction shrinks at 6 cents per dollar and disappears completely. If you fall between those ranges, a partial deduction still applies. This new deduction is not the same as the additional standard deduction for seniors that has in 2026. The existing additional standard deduction for a single filer 65 for a married couple where both are 65 or older. It is $1,650 per qualifying spouse, $3,300 combined. The OBBBA. Here is the full deduction stack for 2026. Pause and write this down. Single filer 65 or older, base standard deduction $16,100. Existing additional senior deduction $2,050. New OBBBA deduction $6,000 total. 24. A single person 65 or older can earn up to $24,150. Married couple where both are 65 or older, base $32,200. Additional senior $3,300. New deduction total $47,500. According to the Social Security, the average Social Security retirement benefit as of April 2026 was about $24,900 per year. For a single retiree receiving close to that average, the entire annual benefit falls below the $24,150 threshold for millions of middle-income retirees. This means the the deduction stack absorbs the entire taxable portion. Think about what that means for someone you know. Someone who has paid federal taxes on that Social Security check every April for years, never knowing the entire taxable portion could be zeroed out by a deduction they are legally. Consider a situation I will call Patricia's story an illustrative composite, but one representing circumstances genuinely common among Social Security recipients, and receives about $2,000 per month from Social Security, plus a pension of $800. She filed her 2025 return in February 2026, using tax assuming it would apply the new deduction. It applied the standard deduction and the Schedule 1-A was never there. Total deductions on the return, the $6,000 OBBBA deduction was missing. The fix. But first, she needed to know the window existed and what the correct numbers are. All major tax software applies. Schedule 1-A automatic for 2025 returns. Here is the 60-second check. Pull up your return and look for Schedule 1-A. If it is there. If it is not, check the total deductions on your Form 1040. Because figures in other videos on this topic are incorrect and will lead you to the wrong. For a single filer 65 or older on a 2025 return with income, the correct full deduction stack is $23,750, not $24,150. That figure belongs to 2020. Your 2025 total deductions will show $17,700, not $18,150, as some sources have stated. Pause and write down two things. First form, 1040X. You update the specific deduction lines. Attach Schedule 1. Second, the deadline to file that amendment is April 15th, 2029. The IRS processes amended returns in about 16 weeks. Now, for everyone with a traditional IRA, they have not touched yet. Every dollar you withdraw from a traditional IRA is taxable income in the year right now through 2028. The OBBBA, that means the effective tax cost of an IRA withdrawal is lower during this window. A Roth conversion, moving money from a traditional IRA to a Roth, benefits from the same. You pay the conversion tax now, while the deduction partially offsets it. And future Roth withdrawals are tax-free. This is not a recommendation. The question to bring to your preparer is direct. Given the OBBBA senior, should we revisit our IRA or Roth conversion strategy before 2028? If you have not had that conversation yet, schedule it before the end of this year. Here is the full picture. The $6,000 per person deduction is confirmed by the Internal Revenue Service and active through 2028. A single senior in 2026 can shelter up to $24,150, enough to eliminate federal taxes on Social Security entirely for millions of middle income. If Schedule 1-A is missing and total deductions show Form 1040X is the amendment deadline April 15th. The next 3 years are the most favorable window for withdrawal and conversion planning. That 3 things to do today. Number 3, pull up your 2025 return and look for 60 seconds. Number 2, if it is missing, the IRS offers free preparation assistance for people 60 and older through its and a licensed tax professional can walk you through the amendment. Number 1, if you schedule a conversation with your tax preparer about the OBBBA planning window, if you know someone who is 65 or older and filed their 2025 tax in January, February, or March of 2020, that 60-second check may be the most useful thing you do for them this week. And if they hold an untouched IRA, the section at the 10-minute mark is if you want to review the deduction stack numbers. That breakdown begins